Good day, Junior Tikkies. I'm Mrs. Brimacombe, and we are going to look at adjustments where we focus on calculating depreciation on the old and the new. Now, this is nothing new to grade 12 learners. And if you remember back, one of the chapters we've discussed fixed asset, tangible assets notes. So this is just to revise it. The value of equipment and vehicles will always decrease over time. God principle that we need to apply is prudence. This is why we calculate depreciation on the old, the new, and what we've sold using the diminishing balance method or the fixed installment method. Always remember, depreciation is an expense and it's always added to the accumulated depreciation account. Depreciation is debited. Accumulated depreciation is credited, therefore your assets minus owner's equity minus. Now we need to calculate depreciation, and the first we're going to look at is adjustment A, vehicles at 20% per annum on the diminishing balance method. A vehicle with a cost of $140,000 was purchased on credit on the 1st of June 2020 and was correctly recorded. Now when we approach this, we are going to start with accumulated depreciation on vehicles with the balance brought down from the pre-adjustment trial balance. Now if we look at vehicles, always start with the movement. They said to you a new edition was bought for $140,000. This was correctly recorded. It means that the balance from the pre-adjustment trial balance is the balance at the end, and you need to work out the balance in the beginning. This is very important to get this part right in calculating the depreciation on the remaining. So if we look at our accounting period, it ends 28 February 2021. It means it starts the 1st of March. This new asset was bought on the 1st of June 2020, so we need to calculate depreciation on the new for 9 months. It doesn't matter if it's the diminishing balance method or fixed installment. This is the first time that we're calculating depreciation. So we're going to take $140,000 per cost times 20% times 9 over 12. To calculate on the old or the remaining, we have to use the balance in the beginning, which we've calculated the $85,000, but now we need to subtract it with the accumulated depreciation on vehicles in the beginning so that we can get the book value, and then we can times it by 20%. So my total depreciation on vehicles is old plus the new, and that equals $32,948. Accumulated depreciation on vehicles is credited, depreciation is debited. Effect on the accounting equation, minus assets minus owner's equity. If I look at adjustment B, equipment at 15% per annum on the cost. New computers with a cost of $30,000 was bought on the 1st of December 2020 for cash and was not yet recorded. So again, I can start with the opening balance from the pre-adjustment trial balance for accumulate. But when we look at equipment, always start with the movement. There was addition of $30,000. This was not yet recorded. It means the balance in the beginning is the balance from the pre-adjustment trial balance, $50,000. Again, this is important because we need to calculate depreciation on the old and the new. So we need to get that balance correct. So to calculate on the new, it was purchased on the 1st of December. So from the day we purchased until the end of the accounting period is 3 months. $30,000 per cost times 15% times 3 over 12 equals the depreciation on the new. But now we're not done. On the old, we need to use the cost, $50,000, and times it by 15%. Don't forget, before we continue, always make sure that you check, does your total depreciation, if it's added to the accumulate, does it exceed the cost? Does your book value, the depreciation, exceed the book value? Those are the things that you need to check. So to work out the depreciation is debited 1,125 plus 7,500, account credited accumulated depreciation. Effect on the accounting equation, minus assets minus owner's equity. Don't forget, the new addition that was not yet recorded was bought for cash. It means that bank is going to be credited, equipment is debited. Take note, from the pre-adjustment trial balance, bank appears on the credit side. That means we have an unfavorable bank balance. So on my accounting equation, assets is plus 30,000, liabilities plus 30,000. When we complete now the financial statements, what will appear in my financial statements? The total depreciation for this accounting period is 41,573. We have one depreciation account to show all of our depreciation, and that's why you need to be specific. You cannot just write accumulated depreciation. What will appear in your balance sheet, in your tangible asset note? Vehicles. The opening balance is 85,000, so cost 85,000 plus additions equals the cost at the end. If we look at accumulated depreciation, the balance in the beginning is 25,260, and it must be in brackets, plus the depreciation equals the accumulate at the end. Now we can work out the carrying value. Cost minus accumulate equals the beginning. 140,000 minus the depreciation, 32,948, equals my movement. If I take the carrying value in the beginning plus the movement, it equals the same as if I take cost at the end minus the accumulate at the end, 166,792. Looking at equipment, the cost in the beginning plus additions equals the balance at the end. Accumulated depreciation, balance in the beginning plus the depreciation equals, there was no asset disposal, equals the balance at the end. It should reflect exactly the same amount. To work out the carrying value, cost minus accumulate, if we take the carrying value in the beginning plus the movement equals the carrying value, it should give you exactly the same answer if you take the cost at the end minus the accumulate at the end. In my balance sheet, on the face of the balance sheet, we will have current liabilities, bank overdraft, 4,650 plus the 30,000, and non-current assets. Fixed assets will always be at carrying value, so you have to take equipment plus the vehicles. That equals 217,967. Thank you very much. I want to leave you with this quote: the greatest amount of wasted time is the time not getting started. Next, we're going to focus on asset disposal specifically. Hope you have a wonderful day.